Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. ECB to inflict pain as it hikes rates into next year, Lanye says. Weeks for Ireland deters the European Central Bank could raise interest rates into next year, causing pain for consumers as it tries to repress demand that is now increasingly adding to sky-high inflation. Chief economist Philip Plan said on Saturday. With inflation approaching double-digit territory, the ECB delivered two oversized rate hikes in July and September, and promised even more action as even long-term price growth expectations are now moving above its 2% target. We do think that this is going to dampen demand. We are not going to pretend that this is pain-free, Lane told a conference. Demand is now a source of inflation pressures. It was not 6 or 9 months ago in the same way it now is. At 0.75%, the ECB's deposit rate is still too low as it continues to stimulate the economy. So, the ECB job isn't yet done, Lane added. Most economists estimate that the neutral rate, where the ECB is neither stimulating nor holding back growth, is between 1.5% and 2%. Markets, however, see the top of the rate cycle higher, and investors now price in rates just above 2.5% next spring. Land had agreed for months that the current inflation is primarily due to the shock caused by expensive energy prices. Monetary policy is largely powerless against such a supply shock, so the ECB was among the last major central banks to rate hikes. But price growth has now broadened out and started to seep into all aspects of life, while robust consumer demand is also driving prices. Although Line said rates could continue to go up at each remaining meeting this year and may rise early next year, too, the ECB is keeping an open mind about where to stop and will decide meeting by meeting. Line added that the Eurozone economy is likely to flatline over the winter months, and recessions could not be ruled out given high energy prices and shortage of natural gas. If we think our base case into barely grow, a technical recession falling into a mild recession cannot be ruled out, he said separately in an interview with Irish broadcaster RTE. United States Energy Chief Granholm meets with New England governors on fuel supplies. Washington's Reuters. United States Energy Secretary Jennifer Granholm met with the governors of 6 states in the United States Northeast on Thursday to talk about their concerns about soaring fuel costs heading into winter. The Department of Energy said the meeting came after governors, including Charles Baker of Massachusetts, Janet Mills of Maine, and Ned Lamont of Connecticut, Granholm in July about their concerns about prices for liquefied natural gas (LNG) and other fuels in the wake of Russia's invasion of Ukraine. Participants in the meeting talked about ways to ensure adequate supplies of electricity and heating fuels in region which typically experiences tight energy markets in winter. A source at the DOE said. The DOE has made sure contracts for LNG for industry and other consumers are in place. In addition, President Joe Biden's infrastructure law last year included a $500 million boost in funding for the Low-Income Home Energy Assistance Program, which helps United States consumers access heating fuel and raise their incomes, and the administration has called on Congress for more funding. This meeting is an opportunity to talk about what has happened and how we can continue to stay really closely aligned to mitigate any risk on reliability and try and maintain affordability or full in the coming weeks and months, the source said. The New England governor said in the letter that the DOE should explore suspending the Jones Act, allow acquiring goods move between United States port to be carried by United States staff and flagship that are built domestically for part or all of the upcoming winter. I think that's all from me. Don't forget to like, comment, share, and subscribe.